The stock market had a huge bounce today, giving traders some relief. In this video, we're going to break down S&P 500 using SPY and the Nasdaq 100 using QQQ, using technical analysis to decide for ourselves whether or not this rally can be trusted and to see what might be coming next. All right, let's take a look at SPY here. You had this huge support level. This goes all the way back to the 2022 highs. This level, while I didn't expect it necessarily to be such a critical level for the stock market, it is doing exactly that. Huge level of support. And this rising trend line off of the 2022 lows. This goes back to October of 2022 when the market finished its sell-off and then finally put in a new bottom. That trend line is still holding. Yes, we've broken below it on an intraday basis, but each time tested, it has held it into the close. And so the last 3 days, we've tested it and we've held it. This support level going back to 2022, it was tested on Monday and also held it perfectly, in fact. So what does that mean next? Is the market just going right back to all-time highs? I don't necessarily think so. I think that this is more or less a dead cat bounce that we often see when we're in the midst of a major market downtrend. And so a couple of things that I would highlight here. The first off being the anchored VWAP. This goes back to the all-time highs. I've highlighted in past videos. I'm going to highlight it again here. We're getting very, very close to a test of this level. Now, it's flattened out some with the day's rally. It's not pointing so like sharply downward like we had seen before. And when we get to that test, it'll probably be much more flatter at that point in time. So when we get to that level, we want to see whether or not stocks can hold it together there and continue to push through, or whether or not it starts another leg down in this market. If it's another leg down, that could be a good opportunity to get short on the market. So notice how on the last time we tested it, back on March 25th, we tested it, we played around with it for a couple of days, and then we started to sell off to the downside. So that is what we're looking for here. Can it break through this level? Also, right by this AVWAP is a declining trend line. Now you're saying to yourself, well, Ryan, that's above the AVWAP. So if we break above the AVWAP and test that doesn't that seem a little bit bullish? No, not necessarily so. So this red line here, yes, I just changed that color. And AVWAPs, while this has played out perfectly so far, AVWAPs, you can see price go above it and below it, and still not necessarily violate the premise of what the AVWAP is expressing there. So if it goes a little bit above it, that's fine. That's not necessarily a bullish development. But what you're wanting to look for is whether or not it provides a rejection. So if it rejects here, that's a clue. If it comes up to this declining trend line, which I also think is going to be some heavy resistance, that's also going to be important. Now, if it breaks through both of these, that's where you can start getting a little bit more bullish on the market, and where maybe there's more of a sustained bounce. What I like to do for context is go back during specific periods of time, especially very volatile periods of time, and see how it lines up with what we're seeing right now. So let's go back to 2020. And during this time, also extremely, extremely volatile periods for the stock market. But mixed in with all that were some pretty intense bounces as well, going from 274 at one point all the way up to 288. Pretty big bounce for SPY when it was trading in the 200s. Also right here on March 12th, you had a move from the lows of 247 all the way up to the highs of 271. A massive, massive move. So there's definitely the potential that what we saw today could be a one-day bounce. And you also had a pretty steep trend line to the downside as well. So look at how steep that trend line was. We'll tighten that up a little bit. And you can also put an AVWAP line on there as for some guidance. And yes, we did break above it on one occasion, but it came right back down the following day. So the AVWAP is more of a guide, but this is very similar to what we're seeing in the market right now. And whether or not this bounce that we saw today is just going to peter out right when it gets up to this resistance here and start to push back down to the downside. Taking a look at the Qs. Same thing. We go right back up to the 20-day moving average. And this looks like it's a weekly candle mixed in with the daily chart, but it's not. I mean, that's just how massive this move was today on the Qs. 12%. That's not going to be something that you see every day. But nonetheless, you have a huge move to the downside. Now, what I would watch for is whether or not this declining resistance comes into play here. You also have the AVWAP that could be in play. So very close to testing both of these. Could test it as soon as tomorrow morning. Watch to see whether or not it gaps above it. I think probably a gap above it would be much more bullish, especially if it can sustain that level into the close. Now, as for me, I took a shot at SPY today, and this was a pretty interesting trade because I didn't necessarily think I was going to get 30 bucks out of it. Wanted to share this as an opportunity to look at a different trade setup here. But early on, I saw this triangle pattern that was forming. I was like, man, that's some really nice consolidation. It's getting really quiet in the market. The VIX looks like it's wanting to fall here. So I took a stab on this breakout right here with a stop loss below my lows from the previous day. So if it broke below 488, 489.14, I was going to be out of that trade. Lo and behold, the sucker just breaks out. Yeah, first 30 minutes to an hour or so, it was pretty quiet. But then you just got this gargantuan move to the upside. And so I had gone into it willing to risk about 2%, trying to make 4%, hoping that maybe we'd get a decent rally into the close that gives us like 520. That would have been like a dream scenario, but then I was able to get out at 530, which was even better than that. So huge move to the upside on SPY. That was something I wasn't expecting necessarily to get those kinds of gains, but it shows you that less is more in this market, that the more patient you are and the less that you let volatility affect your portfolio, meaning that as volatility increases, you take smaller number of positions in the portfolio. You don't expose as much of your capital to the fluctuations of the broader market, the better off you're going to be, because it's going to keep the emotions out of the trade as well. If you enjoyed this video, I'd encourage you to like and subscribe, and let me know down in the comments below, what was the play for you today? Were you able to capitalize on this move, or did you stay on the sidelines? Would love to hear from you guys. Thank you, and God bless.